Moody's is expecting robust growth for Malaysia, but it warns that debt level could be a problem. The rating agency sees the economy expanding by an average of 5.2% in 2018 after recording growth of 5.9% in 2017. This should support Malaysia's A3 stable credit profile. However, Moody's is concerned about the country's elevated system-wide leverage, including the household sector, which poses credit challenges. While household debt had moderated from 88.4% in 2016 to 84.3% as at the end of 2017, the agency says it is still relatively high given Malaysia's income levels. It goes on to say that although the trend of fiscal deficit reduction has been maintained in the country, the implementation of further fiscal consolidation remains a major credit challenge. That said, Moody's believes a favourable debt structure and large domestic savings help to mitigate risk arising from a high government debt burden. Nestle Malaysia posted record earnings in its fourth quarter thanks to lower expenses. Earnings stood at 133.54 million ringgit, up 99.5% from 66.94 million ringgit. Quarterly revenue rose 2.4% from 1.25 million to 1.28 million ringgit. The group attributes the improved performance to sustainable cost management and different phasing of its marketing investment in 2017. It adds that the growth momentum was supported by domestic sales, which grew by 4.5%, driven by continuous innovation and renovation initiatives, as well as successful marketing and trade promotions. That has pushed its full-year earnings to 275.4 million ringgit on the back of 5.26 billion ringgit in revenue. It declared a dividend of 1 ringgit and 35 cents. As for 2018, the Swiss F&B giant says it will continue to raise efficiency in its supply chain, improve product portfolio, and intensify promotion under its Fuel the Growth strategy. Bina Darulaman saw its latest quarterly results sink into the red, dragging the construction firm's full-year results into a loss for the first time since 1998. It suffered a net loss of 10.4 million ringgit in the fourth quarter, compared with a net profit of 23.3 million ringgit a year ago. Revenue more than halved to just 54.7 million ringgit from 153.92 million. As for its full year, the company reported a net loss of 7.81 million ringgit, while revenue shrank almost 30% to 251.7 million ringgit. Bina Darulaman blames the results on lower progress billings and delayed launches, among others. It also believes that stringent housing loan application rules led to many customers having to cancel their bookings. Moving forward, the developer will roll out more affordable homes priced up to 400,000 ringgit in 2018. It is also confident that its position can support a pickup in earnings in FY18. Petchem's net profit climbed almost 2% year-on-year in its fourth quarter as EBITDA improved 16%. However, this was partially offset by higher tax expense arising from recognition of deferred tax liabilities and higher depreciation at its Sabah ammonia and urea plant. Earnings came in at 1.01 billion ringgit, up from 987 million ringgit. Revenue climbed over 20% to 4.74 billion ringgit due to strengthening prices, which was supported by higher sales volume. A quick look now at its full-year report card. Net profit expanded 42% to 4.2 billion ringgit on the back of 17.4 billion ringgit in revenue. It declared a second interim single-tier dividend of 15 cents a share. Going forward, Petchem said its operation would be primarily influenced by global economic conditions, the rate of utilization of its production facilities, and petrochemical products prices. The group will continue with its operational excellence program and supplier relationship management to sustain plant utilization level at above industry benchmark. Maxis' 74% owned Indian subsidiary Aircel is said to be filing for bankruptcy at the National Company Law Tribunal. According to India's Economic Times, Maxis had earlier proposed a cash infusion to support the debt-laden company, but has decided to pull the plug. The report went on to say that talks with lenders had begun in September, but both parties failed to agree on a recast of its 9.48 billion ringgit debt. Unnamed sources told the Daily that there is no cash to run the business and no visibility to free any more up. The company is said to be likely to stop paying salaries by the end of this week. The report said the decision was precipitated by the Reserve Bank of India, scrapping all debt revamp scheme in favour of the Insolvency and Bankruptcy Code and seeking to hasten resolution. Having not made payments since September, banks can no longer restructure Aircel without provisioning for its debt. The group is reportedly in the process of nominating members to a new board and an insolvency professional to run the process. The application to the National Company Law Tribunal is expected to be made in a few days.